David,
Yes.
how much is enough?
What do you mean?
Like, are LGBTQ people investing enough?
Well, that's what we're going to talk about today on Queer Money episode 369. So let's dive in.
Are you investing enough?
Well, it's interesting. We asked that question, not if you're investing enough, but if you're investing outside of a retirement account on the Motley Fool Guys LGBTQ Plus Money Study. And the data came back and we were intrigued. And that's partly because of plurality, which is less than 50%, but the majority of people and 44% of LGBT folks said that they do invest outside of their retirement accounts, which is good. It's a good number.
Really good number. And 56% of LGBT of trans respondents said that they do. So actually, we were quite excited by this because, in our opinion, I mean, you can almost never really invest enough, right? You don't know exactly what inflation is going to do to the cost of healthcare, the cost of living, all of that 20, 50 years out into the future. And so do you ever have enough for retirement? I don't know. Maybe it's a little bit naive of me, but I always have this fear that we just will outlive our money. And so that's why I just always think the more we invest, the better.
Yeah. And, it's not just about retirement. It's also about generational wealth, which is something that a lot of communities are talking about right now. People of color are talking about building generational wealth within their families. The Latina community in personal finance are really talking about this a lot as well. So I think it's maybe something that our community needs to be a little bit more aware of. Just because we don't have children doesn't mean we shouldn't have generational wealth that we can pass on to others in the community or to the organizations that continue to fight for our rights.
Yeah. Now, some reasons why we might not be investing enough. We've talked about this several times throughout this particular series, as well as on the Queer Money podcast in general. It's just that the history of discrimination of financial services with the LGBTQ community, the extremely small representation of LGBTQ people in financial services, marketing, collateral, and advertising. And then we just did the podcast episode number 360 with the National Endowment for Financial Education, and their research found that a lot of LGBTQ respondents, I think 47%, said that they didn't have access to financial education. So hopefully that's a problem that this podcast and newer platforms are solving.
Right. And so for folks, those of you who maybe aren't investing outside of your retirement accounts, we want to encourage you to take that step. It can be a little daunting feeling like you're going to do something like this, but it actually is something that's really easy. Here are 5 places that we would suggest that you start or look at to start investing: Robinhood, Sofi Active Investing, eTrade, Vanguard, or Acorns. Now, there's a variety here, and some of them do things as easy as just scrape off a little bit of money when you're with your regular transactions. They round up, or they have you invest $5 a week or something like that. And some of the other ones are a little bit more traditional, where they actually have you invest something like $50 a month or $100 a month, or require you to invest $1,000 to get started. But all of these are really easy places to start.
Yeah, some of them, they try to take advantage of the found money, like you said. It's just skimming off the top of your transactions when you're at the grocery store or at a retail shop, and they just round up to the nearest dollar. And so it's almost like, I didn't know I was investing. And the idea is that hopefully 5, 10, 30 years down the road, all of a sudden you have this nest egg that you didn't necessarily feel the pain of having to invest into.
Yeah. I did that with Acorns for us for a little while, and I think I was averaging, the roundup was averaging about $35 a month.
Nice.
And we have quite a few transactions a month. So
Yeah.
it was actually pretty good to see that and watch it grow.
And if you're concerned about having to go into a branch and speak to somebody who might not be accepting of you, don't worry about it. All of these platforms have apps that you can open via your phone, or you can even go online the old school way, go onto a computer and open up an account. And all 5 permit trading U.S. stocks, particularly exchange traded ETFs, for free or for very little transaction costs.
Right. One of the things that we talked about here earlier was this idea that many queer folks don't necessarily feel like they have the kind of education. Well, that's the nice thing about investing with ETFs. Many people in the financial independence, retire early community. They advocate for investing in low-cost ETFs, partly because it's low cost, but also because ETFs are pretty easy to understand. And most of these platforms that we just mentioned have some basic education around how investing, what various options there are for you to invest. Actually, Acorns just basically gives you, I think, 3 or 4 options as to what you can do with your money. And then they put that into portfolios for you. But the other ones like Robinhood or Sofi or eTrade, Vanguard, those have the ETF options.
Yeah, and I think a lot of times people get a little bit deer in the headlights look when they think about investing, like, how do I pick the right stock? Or one of the most common questions we would get back when we were on our customer service days, phone calls from people was, what is the hot stock of the tip or
Yeah.
hot stock of the day?
Yeah.
You know, I want to make a lot of money out of this. And had you picked Tesla maybe 10 years ago or 5 years ago, that would have been a great investment. But if you picked it 2 weeks ago,
like 2 months ago,
you'd be upset right now, right? So trying to pick the hot stock is almost impossible, and we highly encourage you to not try to do that. Doesn't mean you can't invest in stocks, but if that's something that's quite daunting to you, that's where exchange traded funds or ETFs are a little bit more palatable, because they are baskets of individual stocks, and the lowest cost ETFs are those that track various indexes. So such as the S&P 500 that most people are familiar with, or that you might hear talked about in the news in the evening, or the Dow, the NASDAQ. There are exchange traded funds, or ETFs, that somewhat mirror those indices that track the performance, same as the well, exactly what the stock market does. That's what these particular funds do, and that's why they're low cost, because they don't require a lot of active management, and they're easy to keep track of.
Yeah. So don't let this prevent you, this either lack of education or feeling unsure about it. Don't let it prevent you. So we suggest you open up one of these accounts, open up a brokerage account with one of these 5 firms. By the way, we're not being sponsored by any of these firms. This is just education for you. But if you want more information about ETFs, listen to episode 294, where John and I talked about what an ETF is. And then stay tuned for the next episode, episode 370, when we're going to be talking about the difference between actively managed and passively managed ETFs.
Thank you very much. Now stay tuned for your Career Money takeaway from this episode.
Thank you for listening to another episode. Here's your Career Money takeaway from this one. Start investing in the stock market if you aren't already. If you are investing, try adding a little bit more. Stock investing is one of the 3 primary pillars of financial security and abundance.
Then join us next Tuesday for a timely discussion on the pros, cons, similarities, and differences of exchange traded funds and actively managed funds. And then next Thursday, when we talk about healthcare coverage in the LGBTQ community. Thank you and have a great weekend.